All right. Okay. So, Assalamu alaikum, everyone. This is Muhammad Alim from IBF Net, welcoming you all to today's webinar. Unfortunately, Brother Zahid Mateen, who was supposed to be moderating today's webinar, is unwell and therefore not able to join us. May Allah grant him shifa. So, yeah, I'm going to be doing a very quick introduction and giving you some important information about today's webinar. So we're going to be talking about investing, more specifically investing in digital assets. And for that, we have Mufti Faraz Adam. I'm sure he needs no introduction. Most, if not all of us, have definitely come across his work. He is joining us today as Fasset Islamic's director, leading their Sharia governance and ethical development. For those of you unfamiliar with Fasset, they are a borderless super investment app that's built on blockchain and Web3. And they enable ownership and investments in real world assets. I believe Mufti Faraz will be introducing Fasset and giving more details about them during the presentation. Now, speaking of the presentation, we've had a bit of hit and miss when it comes to the chat functionality on Zoom in the last couple of webinars. So if you'd like to ask a question to Mufti Faraz, you can go to the webinar registration page and there you'll see a field for asking questions. Now, we may not be able to answer all the questions due to time constraints, but that form ensures that we take up your questions and reply back even after the webinar ends. So the URL for the question form is ibfx.co/facet. It's the same URL which you used to register for this webinar. Don't worry, we're going to be sending you the URL once the presentation begins. Now, for those of you who are unable to join us live, you are watching this webinar on YouTube after it has been uploaded. Unfortunately, only those who are present in this webinar live are eligible for the certificate, as you will need to confirm your attendance during the webinar by visiting the link which we will share. So yeah, that's how it works. Right. So that's all from me, Mufti Faraz. You can now share your screen and begin. Thank you.
Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen wa sallallahu wa sallam ala Sayyidina Muhammad wa ala alihi wa ashabihi ajma'in and ba'ad. Assalamu alaikum everyone. It's an honor and a privilege to be here with you all today. I'd like to first thank the IBF team for inviting me and for facilitating this entire event and seminar. I'd also like to thank the Fasset Islamic team who've been working very hard behind the scenes, making this come to fruition and making it a reality, right? I guess to begin with, the first kind of point I just want to discuss is, which Alim, he messaged the different queries over to me. I guess the question is, he asked first was, what are digital assets, right? That's the first kind of thing you wanted me to address. When it comes to digital assets, what are they, right? What is a digital asset? And let's forget digital assets in that term for now. Let's just take it step by step, piece by piece, from a ground up kind of way, right? So let's just start from first principles. What is an asset? That's the question we need to ask. Right? What is an asset? If you look at the definition of an asset online, you'll find things like it's an economic resource, it's something which has value, it's something which gives benefit to somebody. But that can be, I guess, very broad. But if you look at your life around you, just look around you, the things that you use, the things that you benefit, the things that are within your reach, all those things are assets. And the point of assets, the key point, which is the common denominator between every single asset, is that it gives you benefit and utility. You actually use it for something. That's the whole point of an asset. So we don't need to be so technical about understanding an asset and defining an asset, but just understand that these things actually give value to you. You use it for a genuine reason. Now, there's multiple use cases. There are multiple use cases for different forms of assets. You can have an asset which can be used as a payment, what we call money. We call that an asset as well. But the only function that it exists is to use it, to spend, to pay. That's the only thing, right? There's nothing else. By holding on to that asset, it doesn't give you any other benefit whatsoever. But then you have other assets which you actually keep with you and you benefit and you use from, right? So your laptop, your phone, the books that you have, all these things, you don't spend them to benefit. You use them. It stays with you and you use them and you benefit from them. So that's the whole point of an asset, that it gives benefit, right? An asset gives you benefit, utility, and it's something that you keep normally. That's one type of asset. It'll benefit you, or you'll spend it and it'll also benefit you. So that's an asset. We understand. Everybody understands that. There's no kind of, I would say, confusion around that. But then the question is, okay, what's a digital asset then? Okay. Now, there is a digital world. I think we need to take a step back and realize, and I think we all agree, that there is a world which is a digital world, which is different to the physical world. So whilst a jug of water, and whilst a book will help me in the physical world, and it provides me a utility, service, benefit in the physical world that I exist in and live in, there's also a digital world. In that digital world, I can also interact, engage with different people. Now, in that world, in that context, you can also have assets because they provide you benefit in that world. And many a time, when the benefit in that world is correlated or connected to the benefit in this world, it becomes a real world asset. Because you're gaining benefit from you in the real world, you're gaining benefit by using something digital. And that's what we mean by real world assets. To keep it very easy, it's just something that's providing you a benefit in the digital world, but it's also then extending to the physical world. And that's a digital asset. Now, the question would then arise, okay, that what makes a digital asset then different to any other asset? Like, we have different forms of asset, right? We have shares, you have different investments, you could have different claims and different rights. But what is it about digital assets, tokenized assets, that make them different to every other digital form of assets? Like, what's the distinguishing feature? And that's really where the underpinning technology is important. That's what makes a difference, because when you think of digital assets, right, you think, okay, what's a differentiator here? But what differentiates digital assets from other forms of assets is this, that when you're investing in shares, you buy or you own a piece of an SPV, a special purpose vehicle. Now, in the fancy world of the financial system, if I'm making an investment in another country, or I invest in property with so many different investors, potentially what would happen is there's an SPV, a special purpose vehicle, a company that's set up. The shareholders of this SPV, so this SPV will issue shares. We all, as shareholders of the SPV, then own whatever assets are held by this SPV. SPV being a company. So we would have a financial right against this SPV. And that's a reality, by the way, right? That when it comes to financial investments, you as a shareholder, you don't really own the underlying asset per se from a technical perspective, right? You have a claim. That's why the accounting equation is assets equals the liability plus equity. That you as an equity holder, a shareholder, you have a claim against the assets, or you have a claim against something for the assets. And here it's a company. So in the financial world, that's how it's structured. It's structured by a web of claims. That's how it all works. And for that to function, you need so many people in between. intermediaries, to ensure everybody's rights are fulfilled, to ensure that the assets are being registered. The custodians are there to ensure that they are registered rightly in the people who own them, that there's no mismanagement. You need settlement parties. You need people to ensure that the payments are made, escrow accounts. You need all these different intermediaries between you and the investment for it to work. That's in the financial system that we have, in the traditional system, right? Or the legacy-based system. That's how this works. But then you move away from that. What makes a digital investment so different, or a digital asset then so different, is digital assets exist in a world, or exist on a network, where the investment is decentralized. The asset itself, you're no longer dependent upon one central body, one central party, or a single point of failure, really, to ensure that everything goes right. That's no longer the case. It's decentralized. That means anyone, anywhere has access. It's transparent now. This digital asset and this investment that you have, it's transparent. You can audit and see, you have full visibility of what's going on, who owns what, and who's making investments, who's making transactions. The data can be audited. That's the second benefit. The third benefit is it's secure. Unlike your traditional based system, in this world and network, when you invest, the data is encrypted. So knowledge doesn't sit with one party. When knowledge does not sit with one party, and you decentralize the knowledge, that's power being decentralized. Because knowledge gives power, information gives power, data gives power, right? That's the world that we live in. That's the reality. And so when you are decentralizing information, decentralizing knowledge, you're spreading out. It's no longer a vertical now. It's more of a lateral kind of involvement with everybody. And then number 4, the records are immutable. So again, there's no single point of failure where it's not the record and the data, the information is not kept with one party on one server. There's hundreds of parties, servers, nodes involved in ensuring that this system is functioning well. And then finally, the disintermediation we spoke about, that you don't have all these different middlemen involved. And so all of this is what really makes this world so different, and what makes digital assets different to normal assets, in that when you're investing in digital assets, you're investing in a decentralized world, or you're taking ownership of an asset through a decentralized world. You are investing through a means which is more transparent. You are investing in a more secure way. You are investing in a way where it is diversified. It's disintermediated. The records are immutable. In fact, when you're investing in digital assets and you have a cold storage, like you have your own keys, you're not using anyone else. Between you and the asset, there's nobody. That's the beauty. This setup only exists in the real world. When I have my phone in my hand, there's nobody else between me and my phone. I can write what I want. I can take a picture of what I want, and nobody's going to stop me because it's in my hand. I have full authority and control. In the financial world, in the traditional system, between me and my asset, there's multiple parties. I have to go through all those barriers to my asset. And perhaps these barriers, perhaps they're just claims against certain parties. That's all they are. And therefore, I'd be in a line of creditors, potentially, or claimants. But now comes the digital world that we have today. It allows you to replicate the physical world, whereby you've removed all these barriers between you and the asset. And now you're, again, very close. So we've taken the financial world and the ability to own assets anywhere in the world and almost replicated a physical world digitally through digital assets. And that's where I think the amazement and potential of investing in digital assets are, that anywhere, Anyone, anywhere in the world can own a piece of stock, real estate, precious metals, regardless of who you are, where you're from, what you do, what's your socio-economic status. It doesn't matter, right? As long as you can, pay for it, you have access. Access is no longer in the control of a few, rather access has been democratized. And that's the most powerful point, I would say, when it comes to understanding digital assets. Alim, your second question, what was your second query, if you don't mind me bringing you back in? I know you spotlighted me, but it'd be good to have your input and thoughts and bounce off your energy. If he's here still.
Yeah, sorry, yeah. So the second question, I think, is what are the benefits of these digital assets that you just talked about?
Yeah, I mean, look, when it comes to, I would say, benefits of digital assets, there's many ways digital assets can benefit, right? And it just depends on the utility and the use case.
Yep.
So a digital asset can benefit by payments, right? I typically give this example, right? Of think of a person in Lebanon or a country which was hit with a banking crisis. You go to the corner store to buy milk and bread. There's no ATM withdrawals whatsoever. You want to get access to money, but there's nothing available. There's a crisis going on. There's limits to withdrawals. You don't have cash with you. What do? You can't use your card, right? What do? There's no you have a choice. I take gold and I will use the gold. But again, gold can't be. It's not easy. Somebody at home just can't go and cut gold into pieces. It's divisible. It's portable. It's valuable, but you can't break it up. Do you take an asset that you use at home, but then you're losing something that you want and you need and you use on a daily basis, but you also need food? That's where the power of digital assets come into play. So something like Bitcoin, for example, I could just transfer just with my own wallet. I can go to the store. As long as the counterparty has a wallet, I can transfer Bitcoin to him. I don't have to worry about all these other externalities and these other issues and problems that exist. I can simply go straight there and make a payment, and I can gain the bread that I need and the milk that I need for my family. That's one thing. So the first, I would say, benefit of digital assets are that they function as payment systems. You can start using Bitcoin in many different stores, and merchants across the world will allow you to pay with Bitcoin. That's the first thing. And again, it helps in regardless of the scenario and situation. The second, I would say, is it's an alternative system. So if there's a failure in the system or people are not in the system, for example, in El Salvador, where 70%, I was just reading a data on El Salvador and other countries where 70% of people are unbanked. They don't have access to traditional services. When they don't have access to traditional services, then they don't have a debit card. They're not banked. So they don't have this ability for remittance, for transactions, for payments, online payments. It doesn't exist for them. Now imagine them traveling from one place to the other. If, for instance, they were traveling from south to north on a holiday, do you carry all that money with you? What do? The dangers, the uncertainties that exist with that. So the beauty of the digital assets and Bitcoin, again, really here, is that it functions as an alternative system for those who are unbanked. Maybe you don't, there's too many barriers to entry in your financial system where you are. This removes all of that. Just a couple of steps, 1, 2, 3, and you're in. That's all, right? Or you're in Africa somewhere or in Europe, you are working really hard, but there's hyperinflation. Hyperinflation. And what that means is the purchasing power of your money is no longer being retained. You're working every month hard, very hard, day in, day out. You come home, you have your paycheck, your salary paid to you at the end of the month, but by the end of the next month, it's already losing value, it's depreciating, right? Because of inflation, where inflation is rampant and rife, hyperinflation. You think, what's the point of even saving the money? So you end up with a short-termism kind of approach to life, that as long as you fulfill the here and now, it's sufficient. There's no point building for the future, because the very money that you're using doesn't allow you, it doesn't facilitate that. No point saving this money whatsoever. You rather spend it right now and gain something whilst it still has value. Now, in such a system, if you have a digital asset, it becomes naturally a hedge against inflation. So you can convert that money now, and you turn it again into Bitcoin or a stable coin, another digital asset, and you can maintain the value of your hard earnings, right? And all the effort you put in, that labor, the sweat, it maintains its value. That's a game changer. So somebody now in the middle of nowhere who was suffering from hyperinflation due to no fault of their own, they were doing honest work, honest labor, they have an opportunity to make a difference. They have an opportunity to change the future of their children. They can invest in something for the long term. These very same people can maintain their value of their earnings, of their sweat and their labor over the long term. They can use that money for a need they have maybe 1, 2 years down the line. So that's the benefit of digital assets. And I would say perhaps in the same instance, remittance. Remittance is something which is a very common, normal transaction we all make. Now imagine a person in some part of the world, their financial system, their banking system doesn't allow, or the remittance takes long. There are some countries in the world, it takes 3 days, 4 days, 5 days, just for a normal remittance to go through, right? From the banking system, from bank to bank, bank to bank, right? And hence they use other forms. There's other forms of sending payments, perhaps uh, faster than the banking system. Imagine a person in Venezuela or somewhere else in the world. There's an emergency. They need medical treatment. It's an emergency. They need medical treatment tomorrow. They need to pay for that treatment. They have relatives in the US or some other part of the world, happy to send the money across. But to do that, KYC and all these again barriers, and the banking system, how long it'll take, 3 days, 4 days, 5 days. But the medical emergency is now. They need the money now. With digital assets, the money can be sent instantaneously. You can remove all those barriers. You can remit that money from you to them, right? They will have the liquidity and the payment mechanism to pay for that uh, bill that they have, the medical treatment that they need. And again, that's a huge, huge benefit. And finally, of course, investments, right? Investments is something which, what we're talking about here, digital assets, the benefit of digital assets is the types of digital assets that exist. There are different types of digital assets. There are digital assets which function as stable coins. So their value is pegged to uh, a fiat currency or some other commodity. Or you have digital assets which function as monetary means, as I mentioned, like Bitcoin. Or you have pure digital assets, which are like your Ethereum and Solana, which are enabling you to do smart contracts and their platforms. Again, they have a certain benefit and value in the digital world. Or you have tokenized assets. You have assets such as, Pax Gold is tokenizing gold. You can tokenize stock. You can tokenize other funds. So the digital world and digital assets allow you to invest in a way which you potentially have never been able to invest, because you're removing the barriers, the people in between, and people in emerging markets, or those markets which typically never had access to such investments, they are being given access today because of this technology. So I hope that answers your query, Alim.
Definitely, definitely. I mean, it's clear that the digital landscape is evolving rapidly, right, and offering new opportunities. This actually brings me to a broader and equally important question about financial growth and security. Why should we be thinking of investing? What are the reasons that make investing an essential consideration for individuals and businesses alike?
Yeah, no, absolutely. This is I guess, yeah, just going on from my previous point, it's when it comes to investing, I think it's really important that why should we be investing? I would say there's four reasons. Number one is inflation. Everyone in the we've seen this in the past year. We are all impacted by inflation. I mean, I'll give you an example of the impact of inflation. Say you have £100, and over 10 years, just say the inflation rate was static 10%, right? As an example. Although I have £100 in nominal terms, it's £100, but in real terms, because of the inflation, after 10 years, that will be £34 only. It says £100, I have £100. But because of inflation, the value of that, the purchasing power of these £100 will be £34. That's if you can key this into a formula on inflation, right? You can work this out. Or if you say the inflation rate is 5%, to make it more, a more real, tangible kind of example. If the inflation rate is 5% static for 10 years, I have £100 and I kept those £100 with me and I never invested. I just held on to the £100. I kept in my bank account, or I kept in my wallet, or I kept these £100 under my mattress, or somewhere else I hide my money. I don't use it, I just kept it there. After 10 years, with a 5% rate of inflation, this will only be worth now £59. It's lost almost half of its value. So if we don't invest as individuals, we are losing the real value, and we're losing wealth. That's what it is. You're not losing money, you're losing wealth. Understand that. You might have money, but that money is no longer wealthy. It doesn't make you wealthy. So money and wealth are two different things. Whilst you have money with you, you don't have wealth with you. Why? Because you don't have value. Wealth is underpinned by value. And when inflation erodes money, the money loses value. When it loses its value, it's no longer wealth, and it doesn't make you wealthy. Hence, we need to be investing as individuals, especially in the current climate when inflation is really high. That's the first reason. Second reason for investing is just meeting your long-term goals. To be able to reach your long-term goals, you need to be able to have money available, because if all your money is being generated and is being consumed, you're buying things, you're using the money, it's income and expense matching, you're not saving, you're not investing, then how can you use your income for other things? So investments allow you to build your portfolio, to build your wealth over the long term. And so everyone here would have dreams. I want to go and study this. I want to buy this. I want to travel here. I want to do this. I want to buy a house. I want to buy a car. To be independent is a good thing. And so that can only happen when you have surplus in your personal budget, and that surplus is then being smartly used. To use your surplus smartly means you invest. That's smart management of money. We need to reduce the consumption of our wealth and increase. We need to put the money to the future. That's why you buy future assets, right? Which future-proof you from the problems that will come tomorrow. So that's the second reason. The third reason, generate passive income. By investing, you generate passive income. So I buy, for example, tokenized real estate. Now I'll gain rental income. Every time rental income is distributed and there's dividend distribution, I will benefit from that. So it's allowing me to generate passive income without me working or doing anything. I'm earning. That's another source, income source and revenue source. And finally, the fourth reason is just this, is diversification of income. Today, it's so important to have diversified income because we don't know what's going to happen tomorrow. If we're all just individually relying upon one salary, one paycheck, and you're not diversified, you don't have any investments, then something happens, you become ill, you can't work, you're laid off, you can't do anything. What happens? You're stuck, you're in trouble. Diversified income supports you in such difficult times and circumstances. At least there's things to meet your immediate needs. So that's why investment is really helpful.
Um, Now, given the importance of investing for personal growth, like you've just discussed, it actually leads us to another fundamental question. And this, I think, is especially relevant for our listeners who are just starting out in this journey. How should a complete beginner approach investing?
Yeah, this is a good question because I don't know, Adim, if you recall when I'm sure you're not a beginner or novice at all, right? In investing, I'm sure you have a lot of experience under your belt. But I think the first thing which is really important is learning and reading. Most people don't learn investments or read about investments. You just do it. But you have some basic information. Now there's so much information available about investing. You can Google it, you can watch videos. You can just do a weekend and learn the basics at least. Understand what you're doing. I would say, practically speaking, if you're a complete beginner, just spend a weekend learning, reading uh, about the basics of investing, what they are, what it is, what's involved, how it works. Choose a platform, right? Take a platform which you trust. Just say you go with Fasset. We're talking about Fasset here. You trust Fasset. Choose one asset class, just one asset class. Bitcoin, right? The king of all digital assets, right? You go with Bitcoin, and you commit a small amount. Something if you were to lose that money tomorrow, you don't care. £10, $10, $20. That's it. You put in $20 through a platform you trust, you recognize, you trust. You choose an asset which is you feel comfortable with. Don't try anything funny you're not aware of, and you start your journey there. Now you sit. Once you've made that first investment, you need to stop and pause. Right? It's not a casino, right? You need to sit, watch, observe the market, observe yourself, see what's happening. Why is it going up? Why is it going down? Start reading. What happens when an investment goes up? Why does the value go up? Why does the value go down? What's making it go up? What's making it down? Why is this fluctuation involved? Observe yourself. How are your emotions? When you're investing and you're seeing this red line happening, how do you feel? Or when it's green and it's rocketing up, how do you feel? Can you control those emotions? Understand yourself, understand your investment. And once you've gone through this early stage of, like, just say 1 month, you've just been doing that, observing, reading, learning, you've put a live investment in as well. Now you're ready to start thinking as an investor long term. Now you sit down and think, why do I want money in the long term? What is it that I'm trying to achieve? Maybe I want to buy a house. Maybe I want to get married. Maybe I want to save something for my children. Maybe I want to send my children to school and education. Or maybe I want to go for Umrah. I want to go on this holiday. These are all genuine good reasons, no problem. Whatever your personal goal is, it's not an issue. Now you need to say, okay, if that's my goal, how much do I need for that? What's my current status? How much am I earning? If I want to reach that goal, how much do I need to be saving or investing on a monthly basis, knowing the potential return? And you can say like a 5-10% return per annum, and then you can work it out accordingly. That's what you do. Then you start committing to investments on a monthly basis. When it comes to budgeting, it's also really important that we try, although experts say 70% for your monthly, your monthly needs and necessities and uses, right? That's how much you should be allocating at the most. 20% for investing, 10% for saving. That's a typical split, 70-20-10. 70 for your monthly needs, 20 for investments, 10% for savings. Why is there a differentiation between 20 and 10? The investments are typically illiquid, generally. They're more long term. Like, you're not going to tap into that. That's nothing to tap into. That's there long term, it's locked away. That's how you should think of that money. The 10% is more like a rainy day fund. Anything goes wrong tomorrow and you need quick money for something as an emergency, that 10% is what's going to help you, but not the 20%. I would also encourage people, let's reduce our consumption. Like, it's really important when it comes to personal development, self-growth. We reduce our consumption of everything. That's one of the key teachings of Islam, right? That's what the Prophet himself, he would only eat one third, right? We all know this teaching. One third for food, one third for water or liquids, and leave one third empty. The idea is to reduce consumption, never consume too much. In fact, we're being told don't even consume 50%. It's less than that. Live in a way where it's minimal, it's controlled, it's bearable, it's good for you, it keeps your back straight. That's what the hadith tells us. In fact, the Prophet himself, he would eat enough so his back would remain straight, meaning he's not like so hungry and he's like, all the time walking, with difficulty. No, he was very strong, his back was straight, but he consumed enough to keep his back upright and strong and firm. But he didn't overeat. He didn't eat to fulfill his wants. He fed his need of his body, what he needed. That's it, right? So we need to control consumption. That has an impact everywhere, not only food. Our consumption of things which are not healthy for us, economic consumption, natural resources consumption, environmental consumption. All these are forms of consumption today. It's because we've transgressed and trespassed consumption, we become pure consumers, hyper consumers, that we see an imbalance in the world. And so to bring balance in the world and balance in our own lives, it starts with you and yourself. When you look in the mirror, if you want to see where you stand, just look in the mirror and you'll understand how much you're consuming, right? To bring health, to make yourself healthy, right? And to make the world healthy, it starts with you. You have to consume moderately. So I would say that's the reason, that's the way when it comes to investing, to start in that particular manner. And this particular, I think that would really help everybody if people did that as beginners.
Right, right. Now, following up from the previous question, and this, I think, is a topic of growing interest, especially among our listeners, who value aligning their financial decisions with their beliefs. What are the Sharia principles of investing in these digital assets?
Yeah, it's a good point. I mean, when it comes to digital assets, there's so many. For the most part, many of them are useless and junk. I'll be honest with you. Somebody somewhere has made them, and they've called it a currency and they've launched it. In fact, it doesn't even function as a currency, and therefore it can't be a currency. When you say something is a payment or a money or a currency, it's a medium of exchange. It must be used between two different things. A medium of exchange, and money was introduced to kind of resolve the barter exchange problem, where you have two different goods, right? And you need to find a coincidence of wants, where both parties want either item, and then it's exchanged. So money was introduced to resolve the problem of always having to find somebody who has the exact same want and need as you, right? And they're happy to make that swap. So that's where money came in. So money functioned between two different assets. Today, most of these digital crypto, or these cryptos, let's call them that, are just purely speculated on, betted on different exchanges, but they have no value. You don't know why you're investing. The why people says, oh yeah, they'll be the best currency in the world, but they don't function as such. They don't add any value whatsoever. That's why at Fasset, we take a very, very conservative, curated approach. We're very particular on which asset is listed on Fasset, because we believe there are definitely a few digital assets out there which have real value, add real benefit, are underpinned by real technology, and are real world assets. And that's why it's really important when it comes to investing in digital assets that you believe and you see that this asset is making a difference in real life. It's not that it's just a economic gain that you're looking for, a financial return. Just because something makes money, or it's going up, or it's profiting, or it's giving you a bit of money, doesn't make it halal. Doesn't make it halal whatsoever. To make it halal, there's 3 steps. Number 1, look at the blockchain. What is it recording? What is it doing? What kind of data is it storing? Is it facilitating, verifying interest-based transactions? Is it verifying, facilitating, recording information and data on gambling, or is supporting a casino, tobacco, alcohol, these types of industries. If the blockchain is designed to verify, facilitate, record data, or is smart contracts supporting any of these types of industries, you stay away from it. You don't want to be involved in that, right? Because we believe that all these industries do not add value to human life. That's our belief. Anything which harms humans spiritually, economically, physically, physiologically, mentally, socially, it's not permissible. That's the whole point in Sharia. So any such industry which harms people in any of these ways, we will not invest in them, because by investing in them, I'm proliferating them, I'm growing them, and therefore I'm involved in growing harm and harming people. So I'll stay away. The second thing is token utility. What utility is this token giving you? Is the utility of the token lending with interest? Is the token being used as collateral for conventional DeFi? Is the token giving you access to unlawful DeFi services? Is the token giving you access and utility to unlawful services? You're streaming unlawful content, for example. That's another thing to look at the utility of the token. What utility does it provide? Or is it purely a currency, like I mentioned, where it's not even used as such? You stay away from them. And then finally, the third check I would say is the type of token. What are its fundamentals? What type of token is it? What has given it its value? What drives its value? What benefit and use case does it give? Is it a meme token? If it's so, no benefit whatsoever. It's just nonsense. Today it's up, tomorrow it'll be down. Nobody cares. Just because 1 million people are tweeting about it and speaking about it, that's why there's a hype over it, and people want to make money and exit. Don't do that. Is it these you have these types of tokens which are wrapped stake tokens, right? Which are tokens upon tokens upon tokens. It's a crazy world out there. So they're very much like derivative type tokens. Avoid them as well. And as I mentioned, anything which purely is functioning as a payment token and nothing else. It says currency and it's only being exchanged and betted upon, speculated upon. Avoid those as well. You want tokens which give utility, which genuinely add value to people, which give benefit, give access to good services, or which are tokenized assets. It's a digital asset which is tokenized, tokenizing precious metals, stock, something along those lines, or it's a token which allows you to build or to run smart contracts, your access to platforms which run smart contracts, data. Any of this is absolutely fine. Or something like Bitcoin, which is a tried and tested payment mechanism, which works, and it's actually a medium of exchange. If it's not that, then I would say beware and be very careful.
Great, thank you for that. It's actually a good segue into the next question, and some people have already asked us this in the form. I'm sure Fasset, as an app, can help with some of the points that you've just mentioned. Can you tell us a little bit more about what Fasset is and what it does?
Yeah, it's a very good question. I mean, look, Fasset is, I would say, the world's premier Web3 investment platform. That's what it is, right? It gives access to tokenized assets. That's what it does. Not only any tokenized asset, it gives you access, what we believe, halal tokenized assets. That's the ethical values are embedded, encoded within Fasset. So it's a platform that brings asset ownership and access to opportunities to people across the world. Because the mission of Fasset is what? Our mission at Fasset is everyone, everywhere, can have equal access to the world's upside and build their future. That's the kind of goal of Fasset. Everyone, everywhere, can have equal access to the world's upside to build their future. Why do we believe that at Fasset? Because look, riba, interest and riba as a system and a philosophy and an idea, riba is driven by two powers. One is imbalance of power, and second is limited opportunities. These are the two drivers of riba. Imbalance of power, where substantial asset ownership rests with the few. Because they have asset ownership, they control and dictate what happens. That drives riba, because they can dictate the terms. They can lend, they can do what they want. They have all the assets with them, the capital. And the second driver of riba is limited opportunities. those many and the poor, they don't have access to opportunities. So the vision and mission of Fasset's goal is this: how do we democratize ownership of assets? Because that will solve the first problem. That imbalance of power will now become balanced when you're spreading out ownership of assets. And the second thing is access. Because people have limited opportunities, Facet's second goal is how do we provide democratized access to people? That anyone, anywhere, whether you're in Lagos or Jakarta or anywhere in between, or any other country for that matter, how can you also own fractional ownership in the property in Dubai? How can you in Pakistan or Bangladesh or any other country in the world own a share in Apple stock? That's what Facet is trying to do. And that's what Facet is working upon. As a tokenized platform, how do we bring two things: ownership and access to the world? And I think that's really powerful because that feeds into the very vision of Sharia, of trying to empower people at a grassroots level. And that will change the tide, hopefully, against riba.
Um, as an advice to a super beginner, where would you actually advise them to park their small investments? Say like $100. Would it be Bitcoin, digital gold, equity, or do you have any other suggestion to them?
Yeah, it's a good question. I don't want to give financial advice here, so I'm very wary of that as well. I mean, look, as a beginner, where would I start? I would say, let me talk about myself because I
Yeah,
can talk, I have full sovereignty to talk about myself, right?
yeah,
And I would say, look, if I was beginning today, I would look at everything that's going on in the markets. And potentially to me, I would, Bitcoin makes the most sense to me as an individual, right? That's what I would select. And that's what I do select all the time over gold because if I invest in gold, I'll think, okay, I'll have to keep it somewhere. Do I keep it at home? Do I pay, custodial fees? Do I do all of this? What's the kind of like, if I look at the return on gold on investment? Not really, just a good hedge. That's all. Uh, Whereas Bitcoin resolves all the issue of custodial services. It's going somewhere. It's scarce. I can use it anywhere, everywhere. To me, it's the asset of the future, and that's what Facet is about: future assets. That's the reality, right? We focus on future assets. So, to me personally, Bitcoin would make a lot of sense. Likewise, I would be interested in tokenized stocks, potentially tokenized property, just to give me some kind of rental income and generate some passive revenue, right? Because Bitcoin might be for capital appreciation long term as an asset, and it being so, I like being digital gold, basically. That's what makes me what attracts me to Bitcoin. But then for rental income and for income generating assets, I definitely look elsewhere as well to see how I can really increase my portfolio.
right. Coming to the topic of the unbanked for a little time. If people are unbanked, digital assets, I think, won't make much sense to them anyways. How do you suggest we bridge this educative gap? There might even be skepticism in these segments.
I
There's
mean,
actually a question that one of our users has asked us as well.
yeah, I don't know why digital assets won't make much sense because, in fact, its potential will make sense, right? Because they don't have anything in a system. Yeah, if you're saying that, because how do they convert on ramp and off ramp? That's the issue,
Right,
right? They can look into that and see, but it's not necessarily that it won't make sense as a immediate kind of I would say investment. If it's digital assets in terms of the second point, I think is where the real question is, where it's too much risk. They don't know how all that system works. That's where I mentioned about knowledge, learning, and reading is so important, right? Alternatively, to look, just for instance, they have nothing. They have no internet or anything whatsoever, right? They don't have ability to access these investments. Then for them, it makes sense to look what's closest to home, right? Build an
yeah,
economy locally and build themselves. So that's the only thing that works. But definitely, I think digital assets would be the way forward for anyone everywhere.
all right. We've talked about investing in digital assets. One of our users has asked us a question on zakat on long-term stocks. So he asked us, how do we navigate zakat on long-term stocks? And a follow-up to that question is, some people say 25%, while others say 2.5%. So how did we get a 25% for the proxy?
Yeah, a very good question. So, look, the question there's a difference between investing or buying stocks to sell and buying stocks to hold on as a long-term investment and benefit from the rental income. It's all about your starting position. That's the way to understand it in a very simple way. If your starting position is, look, I'm holding on to these, maybe in the future I'll sell, but for now I'm holding on to these. I have no like, I'm not looking for to sell in the markets. I'm not just waiting for the right price. I'm holding on to these and I'll benefit. Maybe in the future I'll sell. In such a scenario, you have to pay zakat on the zakatable assets in the company.
Right.
That's the real obligation upon you. The question is, how do you work that out? That's the point. So this 25% thing that you've heard, the 25% is there because it's a proxy of the zakatable assets in a company. In fact, I was the one who developed the 25%, right, in the UK, maybe about 7 years ago, 6 years ago, because I looked at the FTSE 100 and when I saw that majority of the companies were 66 companies which had net zakatable assets below 25%. So 25% was used as a proxy for the UK market to tell them, if you've invested in the FTSE 100 by paying 25%, that should cover your liability and obligation.
Right.
You pay 2.5% on the 100% when you're investing purely. You've bought your stocks purely to resell right now with a capital gain. That's it. No other investment.
Right. Well, I hope that answers your question, brother Zahid. He's sick, but he's still with us in this session right now. There's one last question that we probably can take up. It's about the decentralization world. So the users asked us, how do we navigate privacy in the world of decentralization? Because transparency is good, but as an investor, he might not want the world to know what he's invested in.
Okay. Yeah, but nobody, it's like pseudo anonymity, right? So it's like basically nobody knows your name, right? You'll have a wallet
Right.
and an address. That's it. So nobody can pinpoint you from this person in this country in this look. That's not visible. But
Mm.
yes, your address would be visible on a record digital ledger.
Yeah, I think now when we just search for a wallet address on Google, it just gives all of the details, like this person has this many, Ethereum, this many Polygon and stuff like that. The other questions that people have asked us are very technical questions about Facet. So what I'll do is I'll actually forward these questions to you, so you can, maybe one of your team members can reply. And then there are some other questions that are not really relevant. They have been answered. There's one user asking us, what is the best strategy to convince the Muslim community that Islamic investment is better than others?
Yeah, I think the best strategy is to give an example of if what I understand Islamic as an Islamic strategy, right? They're not investing in haram.
Yep.
That's the kind of question. The answer would be just tell them, would you want your children to be involved in these industries, the haram industries? If yes, then no, I'm sure nobody would say yes.
Yeah.
So if you're investing in haram activity or impermissible activities, then you're simply increasing the chances and likelihood of those very things influencing your children and your children being involved in, right? So I wouldn't want my child to be drinking alcohol. So if I don't want my child to be drinking alcohol, I don't want anybody's child to be drinking alcohol. And therefore, I'll do everything not for alcohol to spread. And therefore, why should I invest in there? So the more personal you make it, the more it will be real to people and will mean something to people.
Right. Right. Okay. I think that's all the time we have for the questions. Thank you so much for that enlightening session. I think while you were presenting, we were receiving some questions and they kind of answered themselves. So Jazakallah for that. To the participants, I'm actually going to be sharing the link right now to confirm your attendance. So again, I think this was mentioned in the emails that we sent you, that you are eligible to receive a verifiable certificate with its own unique ID. and these certificates are actually compatible with LinkedIn's certification section. So I've sent everyone the link right now. So please visit that. And for those who've asked us, oh, we're still receiving questions about Fasset. I'll actually forward these to the Fasset team, and inshallah they can reply to you as soon as possible. Yeah, I guess that's it. So thank you very much, Mufti Faraz Adam, for your time, and thank you for the participants for joining us. I know it's late in a lot of the places. It's 8 p.m. in Jakarta right now. We've received registrations from Australia. We've received registrations from all the way, in Canada, US, and all those places. So thank you for making your time, and thank you for joining us. And inshallah, if we have a follow-up session to this session, we will inform you via our social media channels. All right, I think that's all. Thank you. Thank you, everyone. Assalamu alaikum.
Alaikum.
Salam.